The graphics of candlestick charts allows the candlestick investor to make a much stronger assessment of which way the market is moving. On a short-term basis, meaning the last couple months, we can see that the Dow has had a hard time getting back up above the T-line, but it seems to bounce up from this little trend channel or support level. However, looking at the longer picture, we can see that the Dow is doing a big dumpling top. That's a big slow rounding curve top, opposite of the fry pan bottom, which is a big slow rounding bottom action. This basically tells us over time investor sentiment has been waning. It also gives us a high probability, based upon what the Japanese rice traders have identified for us over the last 400 years, is that when investors, or these patterns set up, investor sentiment starts getting very negative and creates a very strong move to the downside. So after months of not being able to trade this market because of the quick whipsaws up and down, the overall market is telling us something, that there could be a very big strong downtrend, which allows investors to get ready to put on puts or short stocks. And simple techniques for being long or short utilizes the T-line with candlestick signals. This is our recommendation on WABA, W-U-B-A, to be short, because we notice what we had up here. Bearish engulfing signal, gap down through the T-line, and ever since then, even though the market has waffled up and down, WABA has never been able to get back up above the T-line. So there's a very simple technique in candlestick analysis. That is, if you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. This also can be seen in BITA, B-I-T-A. Big sell signal, close below the T-line. It's never been able to get back up above the T-line. So using candlestick signals and the T-line allows the investor to stay in a position with a high probability that you're in the right direction. Even at times where it looks like the market might be turning, if an individual stock can't get back up above the T-line, you can stay short. This dramatically improves not only being in the right position at the right time, but maintaining that position even when other indicators or other factors might be ready to scare you out of that position. That'll be it. We'll see you in the chat rooms.